Hello everyone, and welcome to today's webinar where we're going to be looking at what's been happening in the US markets, particularly the indices. I think we've got some commodities and we've got a little bit of Forex as well. It's called day trading, the US session, isn't it, David? Yes, the US session, and really you can apply, it could be any market, any instrument, but what we tend to look at are the indices, a bit of commodities, and we also, as I said, a little bit of Forex. But before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be very risky. Please don't ever use money that you cannot afford to lose. Just for the benefit, I know of some new people that have joined us today. The way David and I look at the market, David, by the way, is my husband and fellow trader, and he's sitting behind me. We use a methodology, volume price analysis, and it's looking at the charts through the volume of through the prism of price action and volume, and it's really based on the concepts and theories that were first developed by Richard Wyckoff. There are three laws that he formulated, and we'll be looking at those laws on the chart, and really how you can sum up those the Wyckoff method, if you like, those three laws, is they give the price, they tell us what the structure of the chart is in terms of its price action. And what we then do is we then look at volume, and what volume does is it tells us whether the price action that we're looking at on the chart is actually authentic or not. I know a lot of you who come along have already purchased the book that is up on Amazon. It's here. It's a complete guide to volume price analysis, explains the methodology, introduces you to the methodology. There is a version for Forex as well, but this is the first book that was launched. And then what we've done now is we've done a companion book, which basically has, I think, over 200 worked examples of the methodology in action. But it really, VPA really does pay homage to the work that was done by by Richard Wyckoff. And as I said, on these three laws. And the three laws, again, if you've not come across them, are supply and demand, cause and effect, and effort and result. And as I said, what they do is they really tell us what is happening on the chart, but much more importantly is what is likely to be happening next, which is what we want to know. Before we look at the charts very, very quickly, it's the first day of the new trading month. We've just had the first quarter gone by at the end last week. Obviously, the whole of the financial markets, the whole world is being gripped by the pandemic. That's now being reflected in the data that is coming through this first week of the new trading month. We always have the PMI, the PMI data, which tells us what's been going on in manufacturing and in services. And needless to say, it is pretty horrendous, except in China, surprisingly enough. Now, that's we all know that they've all gone back to work, but you can see here this data here. It's called the case in manufacturing, and the number you have to look at is 50. It's like the inflection point, and won't be tied. It's actually come in at 50. Chinese data, we always have to approach it with a degree of skepticism. It's in economic terms, but as traders and investors, we have to work with what we are given. But I can assure you, a lot of people, a lot of commentators have been saying this looks suspiciously like very good news, given the problems that they have had with obviously coronavirus. The rest of the world, the rest of them here, we can see we've got Europe, Great Britain, we've got 47. They're all under 50. That's I suppose you would say, well, they're not far off. They're not far off 50. The bad news is that this doesn't necessarily cover the period of this lockdown period. So it's going to get an awful lot worse before it gets better. From a day trading perspective, obviously that means what is going on a day-to-day basis in the markets in terms of sentiment, what is being sold, what is being bought. And we can see here already the Dow's down, the Nasdaq futures down, the S&P is down, and the VIX, although it's not up in the 60s, the mid 60s, it is still very, very elevated, and the dollar is up as well. And if we look at it from the perspective of the Forex market, what is that telling us? Well, it's telling us that there's been a lot of yen buying. When there's yen buying, it's definitely a risk-off day. The money is going. The money flow is going to be into safe havens. No one is prepared to buy or trade riskier assets such as equities and commodities. And the pair, actually, the pair that I've been looking at in terms of from a Forex perspective since this morning is the Canadian yen, which is this purple line here. And in fact, that's what I've got on my NinjaTrader chart, because it has some very, very nice lessons from a volume, excuse me, VPA perspective, but also with some lessons from the Richard Wyckoff perspective. So I'm going to be looking at that. David's got the indices over there. He's also going to look at the daily. Are you looking at the daily charts as well, aren't you, Di? Yeah, very much so, because that's where we are today in terms of market sentiment, what is happening in the market. But I can assure you, if you had looked at the daily charts as we had done over the last few days, certainly the back end of last week, when the equities were appearing to rise and everybody was looking at, oh great, maybe we've turned a corner. If you knew what you were looking at, you could be pretty certain that was very much a mirage, and I will leave David to explain that in more detail. If you've got any questions on anything we say, you're not clear about, just drop them into the chat box. In terms of platforms, as I said, I've got NT8, David's got NinjaTrader 8. I think you've got TradingView as well, haven't you? And my Forex, as you saw here earlier, this is from the MT5 platform. The nice thing about MT5, although MT4 does it as well, is that if you want to get into day trading, not just Forex, but you want to expand into maybe the indices and some of the commodities without having a futures account, you can do it on this platform. They also have stocks as well. It's a very, very comprehensive multi-asset platform, and the brokers that offer it, it doesn't cost a lot of money to actually to have as a deposit to start trading, unlike futures, where you do have to have a certain amount before you can start. Although I do accept the CME, they have micro accounts now, don't they? Yes, they're trying to encourage more and more traders to trade the futures, and they're offering these very small contracts. So I'll pass over to David. Just bear with me a second. And as I said, if you've got any questions, just drop them into the chat box.
Sorry, I was just moving about the charts there. Apologies. Hopefully you can hear me. I can't hear Anna, she can't hear me, but hopefully you can hear me loud and clear. If someone could just let me know, that'd be great. Terrific. Thank you, lovely. Many thanks, that's great, thank you. Right, okay, I'll move that out of the way. Just move the chat box down. Okay, where to start? Let's start with the VIX. And just pulling that over, there we go. This is the VIX on TradingView, which is a great place to find it. And I've got the 1 minute, the 2 minute, the 3 minute, and I've got the daily here. We got up to a high of just a little bit over 80. We've pulled back. That's obviously been the reversal reversal higher in equities, reversal lower in the VIX. And for the last few days, it's been flip-flopping around, but the general sentiment continues to remain bearish. But from an intraday perspective, it's always a chart that you need to have up somewhere around the place, even if you're only trading specifically Forex, because it gives you a straight heads up into sentiment through the prism of futures and options. So whatever you're trading, I would urge you to have the VIX. If you haven't got it on a platform anywhere that you're using, you can certainly get hold of it at investing.com. Just to highlight what we've got here, I'm just taking my eye off the ball a minute because I'm just seeing this volume come in here and I move away from the volume point of control. top line, we've got the YM. I've got that on 15-second. In fact, let me put that back to 5 minutes so they all match. Sorry, I was doing something else earlier on. There we go. So the top line is 5 minute. This is the YM. This is the Dow future. This is the NASDAQ 100 future. And over on the right-hand side, we've got the ES, which is the S&P 500 future. So we're looking at comparable indices. Down the bottom here, we've got the daily charts for all those three. What Anna was alluding to earlier on, if you follow Anna's posts and also Facebook pages, we've written about this over the last 2 or 3 days. And if I probably bring this one up, they're all pretty much the same. Let's have a look at the ES. And basically, first of all, the candle that caught our eye was really this candle here, which was a few days ago, because we saw the volume falling away. And at that point, you start to think, hang on a minute, this doesn't look terribly strong. The buyers have been absolutely frightened out of this market, bar none. And the big money is not moving back in right now. That move was lightweight in terms of volume. Certainly didn't look right from a volume perspective. The price action was fine. You wouldn't know any different looking at the price action. You'd think, yeah, okay, this looks great. But then when you look at the volume, you think, hang on a minute, this volume's falling away. And that was preceded by this candle here, not quite a doji, but certainly an effort to rise on higher volume. So it's beginning to look weak at this point anyway. This just really gives you another heads up that, yeah, this doesn't look right at all. The volume's falling away. But what you've also got to remember is that this is a huge amount of volume in here, because if you look over to the left, this is, I was going to use the word normal trading days, but typically these are the volumes you would expect to see. But you've also got to remember, these are the price spreads associated. And what this last month or so has done is absolutely expanded the range of price trading to such an extent that when you're on renko charts, and I'll move over to those in a minute, when you're on renko charts and things of that nature, the actual spreads on the bricks are huge, even on the very fast charts, even on the 15-second charts, which you see in a minute. And it's very easy to lose perspective on a day like today, for example, where you think, okay, that's you know, a decent candle. We are talking hundreds and thousands of points in these candles here. So the actual the price action we're seeing today is pretty dramatic. Whereas if you saw it in the normal context of a trading range, it wouldn't be quite so dramatic in terms of the spread of the candle. We then had this candle, which was the down day, which, you know, was no great surprise. But then what followed was a repeat of this candle, but on even lower volume. The volume here has fallen away further, and it's just giving another heads up that this is not a reversal from primary to primary, in other words, from bearish to bullish. This is actually a short squeeze. This is similar in some ways, if you like, looking at a similar sort of chart structure, chart pattern as to this event here, where the market looks as though it might be rallying. We had a ton of volume, looked as though it was rallying, and then started a roll. And then, of course, all the global news became even more horrific, and down we go. This is now looking increasingly like that. As I say, we wrote about a couple of days ago. This was the candle that really alerted us. Then yesterday's price action, very narrow, higher volume driven into the market. The market is not going anywhere. If it was buying, then that should have gone up. It hasn't. It's just very compressed. There's heavy selling by the big operators in here, and we're going down even further today. I'm just tracking over onto the, I'll just pull the VIX over. You can see it for yourselves rather than me just ramble on about numbers. There we go. It's ticking up quite strongly, as you can see, and that's the reason that we're starting to see this quite strong move now in the indices in the opposite direction. Let's pop that back over there. And that's where we are now. In addition to that, this is a very minor aspect of it, if you will, in the context of what we're seeing, but certainly support and resistance comes into play. We've got a minor level here that's been tested. Obviously, if that's tested and retested, it will become ever stronger. But these levels up and down are relatively minor. So it's really the question of what is going to support this price, and the answer is volume, and that will only happen when we see stabilization of price, an extended congestion phase, increased volumes of buying with more wicks to the bottom than the top. And at that point, the market will flatten out and begin to rally. But it's certainly not the case at the moment. From an intraday trading perspective, you don't really care which way it's going. Just want to be on the right side and the right side at the moment is on the bearish side. As I say, these are on the 5 minutes. Just pull that up a little bit there. There we go. And that one there. And the reason I always have the three running, I've said this many times before, is when you have the three indices running in parallel on your workspace, they give you different perspective on price action, they give you different perspective on volume as well. And on occasion, you see one leading the other, or two maybe leading one, and it gives you an indication that the one that's lagging is perhaps going to be dragged up by the others in due course. You frequently see that with the YM. Often you'll see the NQ leading with the ES, and the YM is a bit of a laggard, purely based on the construction of the index and the number of components in those indices. Let's go back onto the renko charts, which I mentioned earlier on, which I've got down here. There we go. This is on the YM, so we're on the Dow 30 here. A little bit of a rally developing here. You can see it developing on the renko. But the point I wanted to make is that this is on 15 seconds, so this is very quick. You can see here, this is the renko, the Ninja renko optimizer that we developed works in two ways. You can either set the brick size, or you can set it to the optimal setting, which allows the indicator to calculate that automatically for you. So you're trading at the optimal speed for all these different time frames. As I say, I've got this one on 15 seconds. This one is on 30 seconds, and this one is over on a minute. And the reason I've done that is just to highlight the point that if you look up here at the actual points being delivered per brick at the moment, I mean, this will change throughout time. And these don't just stay static all the time. As a rule of thumb, the faster the time frame you've selected, we're on 15 seconds here, so I will be checking this maybe every sort of few minutes, 5-10 minutes, something like that, just to make sure I'm still running at the same optimal speed. If you go up to the 30 second, then you maybe push it up to 5-10 minutes, maybe a little bit further out, and up onto the 1 minute, you'll be looking at a little bit further out still. Just a rule of thumb. Obviously, these speed settings change the whole time. They will reflect the momentum of the market. Because the renko chart is independent of time, it smooths out not only the price action into the brick formations, but it also delivers momentum. So when the market is fast moving, the bricks will be delivered that much more quickly. When the market is slow moving, then they will be delivered more slowly. And in addition to that, then the actual brick sizes will change. But the point I want to make is this. You've got 13 points up here. Now, 13 points on the index is $5 a point, which is very tidy. Thank you very much. But that's just one brick. So each of these bricks, you're looking at 13 points. Over here, you're looking at 20 points. That's $100 a brick. Over here, you're looking at 30. That's $150 a brick, and that's on the small. That's on the small Dow. That's on the mini Dow. If you move up to the big Dow, $25 a point. I'll leave you to do the maths yourself. But that's how it works, and that's what's happening at the moment. Because we're having these massive swings in range intraday on these indices, that is reflected on these much bigger brick sizes on the charts themselves. Normally these would be a handful of points. Now we're talking tens of points, 20s of points. It's a major difference. But the indicator works exactly the same way. It doesn't care about what is going on in the global market. It's just delivering the optimal size to trade that particular instrument at this particular time of day. And it just makes the point that in these volatile markets, this has been dramatically increased. And as markets calm and move back to more calmer waters, then the actual brick size will reduce accordingly. And it's just a great way to trade using a non-time-based chart in conjunction with a time-based chart, a blend, in other words, a blend of non-time and time. The renko smooths everything out, and these work fantastically well. The renko indicator works brilliantly with all the other indicators. I've got the accumulation distribution indicator on here, which is support and resistance. I've got the trend monitor below, and I've got the trend dots. The trend dots work very close to the price action. As you can see here, you do get changes, but that's the way it was developed, because it wants to work very close to the price action, give you that heads up. If that is a true change in trend, then it'll be reflected in the trend monitor itself. And if it isn't, you might get changes to a darker color. These will only change, the trend monitor will only change once we have a true change in trend. And that's the way we developed it, because the hardest thing to do in trading is actually to stay in a trend once it's underway. Once you've got some profit in the bank, you want to keep it, and you want to stop the emotional trigger when a market reverses against you, which is to close out and take your profit. This is developing very nicely. This is over on the 1 minute. Let's pop that up full size. There we go. We're on the 1 minute chart now. Let's take a look at the volume. Okay, we had a little bit of buying coming. We had this little move to the downside, but you can see the buying coming in there. You've got a narrow spread candle, a little wick to the lower body, but an increase in volume. So that's telling you that there must be some buying in there, because otherwise that would have been down here somewhere, and it isn't, it's up here. The same is true of the next one. So we know we've got some decent buying in here. So if we're short this market, then what we're expecting to happen is for the market to rally. We're not sure quite how far it's going to rally, but we're certainly expecting a rally. So we're not exactly surprised when it does exactly what we expect it to do, because this volume profile with the price action has told us that's what's going to happen next. We then see the rally come. First bar looks okay. Then we see the next two, volume falls away. But then in addition to that, we move to the other aspect of volume price analysis, which is very much consideration of support and resistance, both from a volume perspective and also from a price perspective. And you've got actually both here, because what we're seeing is a run towards the volume point of control, where we've got the heaviest concentration of volume. So for that market to drive through there is going to take a massive effort. So the expectation is at the very least it's going to congest around that region for some time. And secondly, we've then got price-based resistance here, this blue dashed line. The thicker the line, then the thicker the heavier the concentration. That's how the accumulation distribution indicator works. It's just a very quick, very elegant way of presenting support and resistance from a price-based perspective. Visually, you can see instantly which areas are strong and which are less strong, and then get a sense of whether the market is going to move through there quickly with volume or not. It's breaking away nicely, really nice move to the downside. You can see it developing here. This is pretty nice stuff. It's not terribly stressful trading. Got a rise in volume here. We had a spread candle there. Then we get the increase in volume. Nice candle there. We're seeing the same over here on 32nd. And over on the 1 minute, we're seeing that too. And that's how it's reflected on the renko. We've got the trend dots just pushing down, nice and red. Everything's bright red. One of my favorite colors, I have to be honest and say, well, certainly when I'm trading at any rate. And that's because markets will fall faster than they ever rise, 99.9% of the time. And therefore you will make money quicker in a falling market than you ever will in a rising market. Let's just go back onto the indices. Here we go. This is the, I've got the, sorry, that's not the one I wanted. Just want to go to the one with, where are we? I'll stay with this one. That's fine. That's okay. I've got the YM, the NQ, and the ES, 1, 2, 5, and down the bottom here I've got the dailies. So I was doing something else here as well, but that's okay. We'll stay with this. Actually, let's just change that over to, let's change that over to the YM as well. So we've got all the same then. Change that over as well. There we go. Okay, now we're looking at the YM across the three. So we've got the 1 minute, 2 minute, and up to the 5 minute. Let's just drop this down to 15 second. That's one of my preferred time frames to work when I'm trading these. There we go. Just reload that one. There we go, so we've got everything there. Okay, we've got the NQ down here. We'll just concentrate on this one, the YM at the moment, just to see what's going on in terms of the multiple timeframes across here. Trend monitor is bright red, as you would expect. No great surprise there. Obviously, if there is going to be any change whatsoever, the first place you'll see it is here, because you'll see the trend monitor transition first, and then it will ripple through to the 2 minute and ultimately across to the 5 minute if it's going to be a change in trend. Let's pop that up full size, make it easy to see. A little bit of buying coming under that, not terribly strong. These are always great candles to look for in a downtrend where you've got an effort to rally and falling back, effort to rally and falling back on good volume. It's not a sign of strength, it's a sign of weakness, and you know, down it's going to go. They're what I call the water-filled balloons. These aren't great examples, but often when you do see them, you get a big wick to the upper body and then a nice deep body to the candle itself, and it's like a water-filled balloon. You're filling up with water, and it's getting ever elongated, and then it explodes, and the water cascades out the bottom. Pretty much the same with a cascading price action. Nice confirmation of volume there. Confirmation of volume. All looks tickety-boo. Pretty straightforward for the time being. And that's what volume does, gives you the confidence, and the indicators underpin that, helping you to stay in and used in multiple time frames. That's what it's all about.
Oh dear, you see it red.
It is, I just said actually, sea red is my favorite color at the moment. Well, it's always my favorite color, certainly from a trading perspective at any rate. All the same, yeah, all the same. Vic, let's have a look at the, here we are. This is the, let's shove that over there. There we go. Back to the old VIX. Continuing to climb. That's why we're seeing this nice move. So we've got a very nice move up in, you can see the trend monitor I've got here on TradingView. And that's just reflecting the fact that VIX is rising strongly, which is nice. That's on the daily, but you know, it's not looking bearish at the moment. So that's why we're seeing what we're seeing at the moment. Oops, sorry. Move that out of the way again. There we go. Volume's fallen away a little bit on 15 seconds. So, you know, you're expecting there's a little bit of selling pressure diminished there. You might be looking at a rally here. No great surprise when it comes. Just go and have a look and check in on commodities, see what's going on there. Let's have a look at gold. There we go. Gold's trying to rally. It's interesting. There's some interesting technical picture on gold actually at the moment. But just to give you a heads up on something else, this was earlier on in the session. Really nice example of a combination of factors. Just reload that again. Get the VPOP back on there. There we go. Just a combination of factors came in at just as the US markets got underway. We had the plunge here, we had the volatility trigger. You're looking for a possible reversal, or you're looking for congestion at the least. Doesn't always happen, didn't happen up here. We had two up here. This one did, this one didn't, followed through, that's fine. If you're trading it, you've been waiting to clear, then you get another one, then you get the reversal and the congestion away. Got the inverse here. We had the trigger. Then we had an absolute ton of buying coming in under that particular candle. I mean, it's VPA 101. Can't miss it. And then up we go with a nice trend higher. Now what we're seeing is several aspects on this chart and also on the daily as well. We've got the volume point of control. This didn't look terribly strong. Got a lot of wicks to the upper body, tried to rally through there. But what we've got above here is this very strong ceiling of resistance in place at 1608. Which has already come into play, and to break through that is going to take some effort. We're also trading around the volume point of control. We've got an absolute ton of volume here. So for the time being, certainly on this 15-minute chart, if we're looking for gold to break higher, then what we need to see is some real strong volume driving this market upwards. You need to see stuff like this coming in, certainly a volume of this sort of range. It's falling away. You can see here we've got classic, you know, the market's trying to rally, and what's the volume doing? It's falling. So what's that telling you? Well, it's not very strong. Simple. So the market reverses off there. We've also got this ceiling of resistance in place. You've also got a heap of volume in here, and you also got the volume point of control underneath. The positive from a bounce higher, I would suggest, is that not only have we got the volume point of control, but you've also got a cluster of two support regions here, very strong, quite wide. They've been tested 7 times each. The little numbers here, you can certainly see it. You should be able to see it here. This is twice. So this level's been tested twice and held. This has been held 7 times, as is this one. So effectively, you've got something that's pretty strong acting as a support platform, potentially if the market comes back down here. But you're expecting it to congest to that region anyway, because you're back at the volume point of control, which is the yellow line here, the fulcrum of the market. And then above it, you've got this, as I say, this ceiling of resistance overhead. And what's interesting about the daily chart, a lot of volatility. Volume again is very curious, and it's reflecting, if you like, what is going on in terms of equities, where we're seeing this almost mass exodus from the market, both in terms of buying and selling. People have been so panicked out of this market, out of risk assets. They are really they've either sold out into cash, whatever they may be buying, or just moving everything into cash and getting out of this market until the volatility subsides, and then they will come back in. But at the moment, we're not seeing it. This is certainly the same of gold. You can see here we had these volume anomalies, big move in the gold market. The volume is very, very lightweight. There's a huge amount of this going on at the moment. It's you just have to be aware of it and just factor it into whatever decision making you are taking at the moment. The other aspect of that, is obviously we're coming back to, again, support and resistance. We've got the volume point of control. Very strong level of potential support has literally come into play today. So it's just holding the market up at that region. And obviously got this heap of volume as well because we're back at the VPOC. Let's just head back onto the indices again. That's the one. There we go. Just back onto the YM now. Okay, we had the little rally here. This is on 15 second, really quick. Good rally back up, but the market, there's a lot of volume here. Now look at the volume got driven in here. Is this strong or weak? It's weak. Why? Market's tried to rally. Ton of volume driven into the market, and it hasn't gone anywhere. If that was going to rally off there, it would have gone up here somewhere on that sort of volume, and probably even more than that. So it just gives you a straight clue. If you didn't have volume there, I mean, if you just took that down the bottom there and said, okay, what's happening now? You wouldn't have a clue. Simple as that. Confirmed on the 2 minute, there we go. Lots of volume coming in there, a little bit of buying coming under that candle, but nothing to frighten the horses at the moment. And on down we go. And the only thing you will have to do trading these markets, as I'm doing at the moment, is you have to set your stop losses a lot wider. As an intraday scalper, on something like the YM, you might currently run them at, I don't know, 20 points, maybe 25 points, something like that. Now you're having to widen them up, maybe double that. But then in doubling it, you're putting more risk on the table, but boy, the rewards are much higher because the market is moving so fast and in such big ranges. So if you get it right, there's a lot of money you make quickly in these markets. It's as simple as that. It's all about risk and reward. Just checking over on the VIX, they're still going up.
Just see where that likely to be heading to.
Well, let's pull that over to see where the VIX is going. Let's have a look. Let's change that to 30 minute maybe. There we go. Where's it heading back up to? Maybe back up to 60. Oh, on the YM. Sorry, apologies. That's on the VIX. On the YM, well, let's just pop that open on the daily. Sorry, God, apologies. I've been doing all sorts of things here today. Right, that's the YM. Pop that over onto the weekly. There we go. That's what the weekly chart looks like. Absolutely terrifying. And it also puts in perspective this whole business of, this is, I say, normal price action, fairly considered price action. Yeah, we get nice days where we maybe get moves of 200, 300, 400 points, which are always nice to trade. But we are talking thousands in here, thousands and thousands again, and thousands to the upside. It's like the monetary unit of trading has changed from a point to 20 points. It's that sort of extreme of price action that we're seeing. It's quite well, it's unique. It's something you probably won't see ever again, and certainly not associated with what we're going through at the moment. I would hope, not in this lifetime at any rate.
What's the move that you're at the moment? Where's that likely to be going to?
What, intraday? Okay. Well, intraday, such a steep move. Let's go up to a slightly slower time frame. Let's go to 15. Okay, let's go up to 30. Go through the gears. We're dropping out of the volume here, so once we get through down here, we're into open space almost. 60. So it's down here somewhere. It's down at 20,700 and something, maybe down that sort of level. And again, you go onto these different charts, you get the different perspective all the time. We had this effort to rally, big wick to the upper body, lots of volume driven into the market, and now it's just collapsing out of sight. Just put that back on 5 before I forget. There we go. Little rally on the 15-second. Got the VPOC over there. You can see the trend monitor moving into a transitional phase, looking maybe to come out the other side. And if that was going to truly reverse of trend, then obviously what you will see in due course is this changing to a darker color. And finally, your 5-minute would change to a darker color and ultimately through to blue if this was a full-blown reversal. Can't see any reason why it would be at the moment. And what the VIX is doing, still ticking up. Let's go and see what's happening in, let's just a quick check on oil. There we go. That's part of the reason the Canadian dollar's been under such pressure, has been under the hammer today. Fantastic trade on the CAD yen. You can read about it on Anna's site, but just pull it, I think I've got it here actually. Yeah, that's the one. There we go. Out of the way, there we go. I think it was on the 30-minute we did the, yeah, that was the one. I think we were writing around here somewhere about the weakness, which Julie went all the way down. We had this snapback, and now it's picked up the trend again. But this is what we were writing about here. They had the move lower, then we had this ton of volume coming in under this candle, more under this candle. It's just a sign of weakness, effort to rally, good volume, effort to rally, good volume. That's what you're looking for. And then you get the inverse of that, and you start to get candles with wicks to the lower body. And it's just very simple to look at a chart and think from the perspective of wicks, where is the balance of wicks? Are they to the upper body or are they to the lower body? Because that in itself gives you a perspective on whether the market is bullish or bearish. And then it's down to interpretation of the volume, how much buying you've got, how much selling you've got, etc., etc. What was interesting about this rally was, again, going back to the volume perspective, the volume looks lightweight. This is a widespread candle, and what you're looking for constantly is a comparative nature of candle and volume. Now, it may be you're looking at a slightly different session period, but in this case, we're not. We're actually comparing light with light. But if you look at this candle, for example, you look at the volume under it, the volume under here, I wouldn't say it's half, but it's sort of 2/3. So in its own right, it gives you a perspective of the fact that this is in other words, the big operators are not participating in their move. They're standing on the sidelines. Everyone's rushing in because they think the market's suddenly going to take off, and they are not. They're moved out of the market. They're just waiting. In goes the selling, and down goes the market again. Confirm with this one, effort to rally, down it goes. Another one, effort to rally, bang, can't survive. Down we come again. Now we're starting to see some little wicks appearing at the bottom. Not a huge amount of buying, but certainly a little bit there to at least bring a pause point to the move and a potential further congestion phase, maybe something like this developing. But that's the nature of reading the chart in terms of the price action and the volume. Yes. You've got effort versus result. You've got, as Anna said, you've got two laws there of Wyckoff: effort versus result and cause and effect. Let's just go back to, where were we? Oh, let's go to the renkos again. Haven't been on the tick charts yet. I haven't got them up actually. Oh, yes, I have. Sorry. Yes, I have. Sorry. There we go. Now we're seeing this little rally. If you're a scalping trader, this is a decent take. This is what I'm saying. This is 830 to 900. If this is 70 points, that's $350 in there. And that's on a 15-second chart. So what are we talking about? We're not even talking a minute here, maybe a minute, minute and a half. that's what we're dealing with right now. There's a huge amount of money to be made. You've got to be light on your feet. You've got to know what you're doing, and you've got to apply volume. Simple as that. Yep. Are there any questions, by the way? Sorry, I have my chat box closed. Okay, fantastic. There we go. So a nice session, lots of price action, lots of good two-way price action. Should have a quick check on the tick charts. I can't remember what I've got on here. I've got the YM here. Yeah, that's it. There we go. And tick charts you can use exactly the same way as Renko. This is the tick speedometer. A lot of traders guess what the tick setting should be because they haven't got a clue, or someone's told them. Again, the optimizer here, the tick speedometer, it tells you, it delivers the actual optimal tick speed for any instrument, any market, and you can apply spot Forex, futures, doesn't matter, works in exactly the same way, and you'll be trading at the right tick speed for that particular market and in the session. Because again, like the Renko brick sizes, tick charts change in speed, because as the market increases its momentum or decreases, then the actual tick settings change as well. These change all the time. Currently running pretty slow. You can see here in red, you get this color variation. So the market's a bit sluggish right now, sluggish here, sluggish here. You want to see it running in green and orange. We get lots of activity. You can see the buying coming in here, which we're seeing reflected in this now. That's what we're looking for. And it's a blend between volume and trading with volume price analysis on a time-based chart, which we can read from here, but having the advantage of trading on a tick chart, which we've got over here, which, like the Renko, delivers raw momentum in the chart itself. Right, let's go back to the indices. There we go, just to wrap up. Effort to rally, but probably not going too far. We will see. We've got a, sorry, that's on the weekly. Let's change that back to the daily. We've got a volatility indicator on there. So that's what we're expecting to see. There we go. Back on the daily, so we're back on the daily on all three. Big spike in volume here on the 15-second. Effort to rally, big volume. And what do you expect from that? Well, probably not going to go up from there, probably more likely to go down. That's it. I hope you've enjoyed it. I'm just going to wrap up, just pull this up if I may. That's there we are. That's the blog post I was talking about earlier on Anna's site. That's Anna's site. You can find all the details on the books there, all up on Amazon. Alongside, that's the Forex education program, the complete Forex trading program. And it covers everything you could possibly need to know about Forex and includes all the tools and indicators also. Got all the modules down here, the 5 core modules: psychology, fundamental, relational, technical, and mechanics of trading. And then you've got a whole raft more. I think there's over something like 200+ hours of video in there now. We're constantly adding more, and it's just a vast library of information to help you navigate your way through the Forex market with the quantum tools and indicators. Speaking of which, you can find them all here. MT4, NinjaTrader, and TradingView, and these are all single licenses, so you can use it on both. It applies to both platforms. 7 and 8 is just one license. 4 and 5 is one license. TradingView as well, single license. We're working on TradeStation. There are going to be 2 versions. There's TradeStation Global and TradeStation Securities. TradeStation Global is driven by interactive brokers. So if you have an interactive brokers account, you can hook it up to your TradeStation platform, which I have running here, and you can trade through your TradeStation using the interactive broker data feed. It's a fantastic combination. We're working on that at the moment. We've got some interesting tools which we're developing on that. And then you have TradeStation Securities, which will be running on version 10. TradeStation Global runs on version 9.5. TradeStation Securities will run on version 10. So we're developing the indicators for both platforms, because obviously with the different data feeds, they are slightly different in the way we have to develop them. So they are coming along. It's taken us a little bit longer. Normally we do 1 platform at a time. Here we're doing actually 2 in tandem. So it's taking a little bit longer, but they will be available in the next 2 to 3 months, I would think, when we'll be up and running with those, and then we'll be moving on to develop a further platform thereafter. So there we go. I hope you've enjoyed today and found it useful, enjoyable. Do appreciate you coming along. Much appreciated for you taking your time out. Hope you've learned something perhaps you didn't know before. Enjoy the rest of the trading session, because we will, and it's certainly a lot of money to be made out there right now. And all I would say to you is please stay safe, look after your families and look after yourselves, and try to stay healthy in these very, very difficult times for all of us. So thanks for coming along today, and see you again soon, and bye for now.